Canadian oil and gas is one of the massive opportunities in the Canadian market right now that's been unlocked by the recent destabilization of the Canadian economy, and most importantly, by the massive political shifts in Canada. This is going to unlock massive infrastructure investments, and it's going to unlock a massive amount of wealth for Canadian investors. I'm talking about these boring old Canadian oil stocks suddenly becoming growth beasts. These are trading at bottom of the barrel PE ratios, and you could see some of these companies grow faster than Shopify in the next 5 years. I'm talking about an energy boom that we haven't seen in this country in at least a decade, maybe two. And you, as a Canadian investor, could take advantage right now for an incredibly cheap price. Today, specifically, I'm going to be talking about an article that talks through some of the major changes happening in Canada, why they're impactful, and it has one of the best quotes that I have seen in the Canadian investing space in my lifetime. Let me bring you through the article. Let me talk to you a little bit about what's going on here, and let me tell you why I think there's some massive, massive gems for us as investors in here. Now, the article right now, it's on Yahoo Finance. It's from Jeff Lagerquist. He's talked a couple times on the channel. Really quite interesting guy. He loves to talk about this space. And today, the main topic of this article is a guy named Eric Nuttall, runs Ninepoint Partners. He's a massive and very, very famous investor in the Canadian energy investing space. He's one of those guys that has just done fantastic. He's constantly on BNN. He's constantly talking about this space. He's really very respected. And so when he says something huge, investors like us should listen. The article specifically is talking about politics a little bit. Now, again, this is not a political channel. I'm not telling you who to vote for. I'm not telling you who to support. I'm a social studies teacher in my day job. I already have to sort of thread the needle talking about policy without getting too deep into the politics of it. And today we're doing the same kind of thing. So don't take what I'm saying as an endorsement or any sort of like political statement. Okay, let's dive through. And really, I'm going to jump right here. Second paragraph on here. And Eric here is talking about the political shift. Now, what does that mean? It means that both sides of the aisle have moved a little bit closer together when talking about energy. And specifically, the Liberal Party under Mark Carney has moved its policy a little bit more favorable and a little closer to where the Conservative Party under Pierre Poilievre sits. Now, again, you can talk about whether or not you like this politically, but as a policy standpoint, it is clear that the current Liberal Party is much more bullish on this industry compared to the previous one. Why does this matter? Well, as Eric puts it here, this can help de-risk billions in private sector investments and allow for massive infrastructure investments into this space. How does that happen? Well, it's all about that political pendulum and about the power that politicians hold on massive infrastructure and other investments. Think about it this way. Imagine you were an infrastructure company and you had been offered the potential to build a massive project under a government that is supportive of that industry. For example, a pipeline. Well, if you know that there's an election coming in 4 years and the other party likely to win that election, or at least a toss-up to win that election, is quite against that investment you're making, right? Against that industry, that would put extra regulations on it, that would make it harder to profit from that. Why would you be willing to bet huge amounts of money? Infrastructure investments are like bonds. You place a huge amount of money on the table upfront with the hope that it recurs revenue for as long as possible. Some of these investments have 50+ year timelines. If you're expecting the political will of the nation to swing hard against that industry, why would you invest that much money? With the Liberal Party moving closer and both sides being, if not aligned, then at least close to one another on the energy industry, all of a sudden it makes a lot more sense for a lot more private money to flow into this space. They can invest knowing that the other side, whoever might win, isn't going to destroy them. And you can argue which one has better policies and which one's actually in support of the oil industry. But the point is, clearly things have changed, and that changes the math on making these huge investments. Again, these investments, the potential infrastructure, is the thing that's going to change this industry, that takes it from a a value industry, a free cash flow industry, a dividend industry into a growth industry. And if that money all of a sudden sees potential, it will happen. Let's keep going here. You guys obviously know the story, right? It's the story of tariffs. It's the story of finding other trade partners as Canada. And obviously there's an election right now. There's a lot of stuff going on up here. And there's been a couple things that have given investors, Eric specifically, but other private sector investors, this sort of feeling that things are really quite different now. One of the specific things that's huge here, Carney has pledged a quicker approach to energy infrastructure. For example, he says federal regulators will be required to wrap up their reviews of projects within 2 years versus the current 5-year timeline. That's massive. We have heard huge complaints from miners. We've heard huge complaints from energy companies about the regulatory process and how it just strangles growth. Well, it looks like at the very least, Carney's trying to sort of let off a little bit. Now, I'm sure you see it on the screen in big bold letters. This is the quote that really made me want to talk about this article. Again, this is from Eric. He is one of the sort of most preeminent, let's say, media figures, but also investment advisors that talks about this space. The day is not far away where Canadian energy stocks will trade at a material premium to US companies. That's some of the most impactful stuff I have seen anybody in this space say. That's incredibly bullish. That's more bullish than I am right now. And again, this is coming from an incredibly respected investor who knows this space inside and out. As a retail investor, seeing that kind of talk, that's huge. This guy's willing to put his name on that. And he is a name brand investor. But what would that mean? What would it mean to be a material premium to US companies? Well, that means massively higher PE ratio. That means that these companies would need to be growing much faster. They would need to be much more profitable. It probably means no more differential, right? Why would they be trading at a premium if WCS, the Canadian Western crude, was still trading at 10, 12, 15, 30, whatever dollars a barrel cheaper than WTI? It wouldn't. So he's saying no more differential. He's saying massive growth. He's saying these companies are going to see PEs that reflect growing companies. Look at the shale oil boom. If you really want to dive into some specific numbers, check out what some of the companies that were really drilling in that fracking revolution down in Texas during that 2015, let's say, shale oil boom period. Look at the PE ratios. That's what he's talking about. He's saying that we could be looking at those kind of numbers for Canadian companies. And as an investor, that would be life-changing money. That'd be a significant amount of money. And the best part is, again, these are boring Canadian oil stocks. These are the sort of thing that you would expect to see in your grandparents' retirement portfolio. They're sort of thing that your parent might buy because they're looking to grow a dividend. And they're looking for something that just returns money year over year over year. And you know what? They trade like that. They have those kind of valuations. They have that kind of value investing factor to them. But imagine now, if all of a sudden we see these things have massive PE ratios, right? They shoot up. That means that the price, the stock price itself, would have to multiply. Particularly if we're also talking about huge growth, right? We're talking about these companies, they would have to grow. They'd have to have huge growth potential. They'd have to be growing in their industry, right? Maybe new projects coming online, maybe some consolidation, right? Maybe new resource areas discovered, right? What if the next basin is just waiting to be discovered? It's happened many times in the past. That might be new technology allowing them to get more product to market. I mean, I've seen some insane numbers for the amount of energy resources that are not commercially viable in Canada. If we see new technology come online and all of a sudden all of that natural gas is available to be extracted, game changer. And the best part is, if we're seeing the PE ratio go up, we're seeing the growth, at the same time, we'd have to see that differential erased, which would mean literally tens of billions of dollars straight to the bottom line of some of these oil companies. And again, if that earnings number is moving up, well, to get that PE ratio up, you're just talking about massive growth. Massive growth. I'm not going to put a specific number on it because obviously this is hypothetical, but hundreds of percent, conservatively, hundreds of percent growth on a value stock that's trading at a what, low double digit PE ratio right now. Some of them single digit PE ratios. And this would be industry wide. This would not be specific to certain companies. You would see just about everybody massively grow. Now, there's a couple more things I do want to touch on in this article. Interesting stuff. They talk about the talks about the Quebec LNG potential, right? Carney's talked about his economic corridors, which really in my mind means pipelines and railroads, but he's talked about that quite a bit. It's a main part of his platform, right? Eric here seems to be really optimistic about that. He says we're finally going to get something done. Obviously, Pierre Poilievre has been massively bullish on this industry. If he wins, it's pretty clear that he is going to be a big supporter. They mentioned a couple of these specific projects. We've talked about just about everyone except Keystone XL, just because the current climate is not asking for massively expanded investments into infrastructure, shipping oil down to the States. We've really been seeing a lot more demand for infrastructure going to the coasts, right? Be that a new version of Northern Gateway, a new version of Energy East, right? One of these sort of projects. Obviously, we've talked about TMX. And here it touches on some other stuff. Enbridge specifically is saying that there's going to have to be some massive legislative changes if this goes through. So, we're going to have to see politicians actually stick to their word. Not always something that happens, to say the least. And obviously, there's a lot of people who are a little bit bearish about this, right? And we've seen Energy and Natural Resource Minister Jonathan Wilkinson. He's been throwing cold water on the idea, but Eric points out this guy also said that oil was peaking last year. And I mean, do I have to say more? Obviously, that didn't happen. So we'll see. All sorts of stuff going on. They talk about BLC 69. We've talked about it a little bit on the channel. Don't want to dive too much into that today. But again, he points out these stocks are going to be trading at a material premium. And then finally says, not a sunset industry. This is not the end of the line for these companies. We're not talking them dying in 5-10 years. He says demand for natural gas and oil will grow for many decades to come. So that is the article. I think it's really interesting. I think as an investor right now, it makes a lot of sense. Take a look at some of these companies. You need to decide which ones you like the names of, right? So, maybe you like a CNQ and why, right? What about that investing idea makes you happy? I'll tell you the things that I like. I like companies that have a strong balance sheet. I like companies that are typically a little bit bigger. For my main positions, I don't want to necessarily build a core position in a smaller cap company. And also, they're going to be able to leverage scale, leverage efficiency better at that larger size. It helps them through the down periods. Look for companies that have growth potential. People like Tourmaline, they're set up for massive growth. They're prepared for this. That's huge. And then look at companies that are trading at those kinds of valuations that make a lot of sense. Some of these companies have traded up a little bit. Some of them are down on a 1-year basis. Take a look through the company, decide what works for you. Always keep a diversified portfolio. Never invest all your money in one place, but seriously, sometime right now, you should be looking at these companies. And that's about all I have for you folks today. I hope you enjoyed this video. If you did, please do like the video, subscribe to the channel. It makes a huge difference and it doesn't cost anything. We've really enjoyed talking about the energy investing space here on the channel. I think it's a huge opportunity. Obviously, if the things we're projecting do come true, it's going to be a game changer for the Canadian economy. And we're going to keep talking about this sort of changing climate, this pivot back to natural resources in Canada for a while here. I think it's a really interesting time to be a Canadian investor, and I just love talking about it. So thank you for watching this far in the video, and I hope I see you in the next one.